Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look at the technical analysis on the gold market, particularly on the short-term analysis on the daily chart and perspective of the nearest week, what patterns we will keep an eye on the gold market. In today's weekly report, guys, we discussed the fundamental background of the gold market in general. Gold keeps the positive mood in the long-term perspective because too much uncertainty right now stands in the economy perspective of the major countries, major economies, as United States, European Union. A lot of uncertainty stands around the policy of the central banks. The expectations on the growth of the global economy stands not really very strong, so it would be at least the same pace as market stands right now for 1-2 years if we will get lucky. In addition to that, it's lots of global political processes holds in the world. So it's not just some conflicts, but also the Brexit, common elections in the United States. So all this stuff significantly increase the uncertainty on the market right now, and that is a really very good background for the gold market. Also, expectations on the massive rate increase by the central banks stands low, but at the same time, the chances on rate cut and turning to the recession right now are not really very strong, and that this some equilibrium in the interest rate also keeps gold market in favor. So, taking it all together, we suggest that for the gold market is we right now stands indeed in the starting point of the long-term bull trend. Speaking on the shorter-term perspective, we think that in the nearest couple of weeks, as we said yesterday about the euro currency and the forex market, in the nearest couple of weeks, market will stand on its own because there will be no significant statistics except maybe the Fed minutes that we will get on Wednesday and some inflation data in the United States. This will be CPI, PPI indexes, but they are not really very we can't call it as the major driving factors. The major driving factors for the gold will be the same. Gross domestic product release in the United States by the end of the July and the July Fed meeting. Currently, it's very strong expectations that Fed will cut rate on the 25 basis points. So 95% probability stands right now that this will happen. But somehow, guys, I have some inner assurance that Fed right now has no real necessity to change the rate. So it's really no objective reasons for that. And maybe it's a bit too brave suggestion, but I do not exclude the chance that rate will not be changed. So this somehow I feel that this really could happen. Just by taking a look at the statistics that we have, not just the recent non-farm payrolls release, but in general what we saw from the beginning of the year, by taking a look at the consumption, taking a look at the stock market, taking a look at the employment and the inflation that we see, that stands really near the target. And I do not see any necessity to change interest rate at all, not to rise it right now, not to cut it. And here my view stands a bit not in agreement with the overall market view. But that is a bit longer term perspective. What will happen within the 2 weeks, we will talk later. What we could get on the coming week. So, speaking on the major target, it mostly stands the same. This is 1450 level. That's the multiple extensions, stands in this area. This is our major monthly extension. This is a bit smaller extension on the weekly chart. And that is XOP extension on the daily. So that's target. This is major target, and it should be reached. So because it works as a magnet, and market stands to it. The reason why it has not been hit is just from the technical point of view. This is strong weekly overbought area. In the starting of the new week, market stops to be strongly overbought, and the price will be near the weekly overbought. So the 2 weeks standing in flat action lets market to abandon strong overbought area, and that opened the perspective for upward action. Maybe it will not be very strong, but gradual. And the first pattern that we keep an eye on is the butterfly. So actually we talked about it on Friday. Retracement down here was a bit stronger than we suggested. So if you remember, our suggestion was retracement to the 1390 approximately, but the drop was somewhere to the 1385. So extensions and levels on the intraday charts have been broken. But at the same time, take a look with this drop, market has not taken out of these lows and keep the shape of the butterfly. As here, top was slightly below this one top, as here, this low slightly above this one low, and that keeps the butterfly valid. So that is still the pattern that we're watching for. And here is the moment where we could make the decision on the taking a long position. But here exist two problems for this setup. First is the grabber. So if you remember on the daily chart, we see we have the bearish grabber, and it suggests taking out of these lows. We have some doubts on this grabber, but because it could be formed not because of the changing in the sentiment of the market, but because just occasionally due to the strong weekly overbought. Here market was not able just to proceed higher, meeting the overbought and shows a retracement. And that leads to appearing of the grabber. Here's again not the fact that it definitely will work. This is the first moment. On the intraday chart, guys, we have the second moment. On the hourly chart, let's start first from the hourly chart. So here is our ABCD pattern and OP target that we talked about. It was standing right here. Also, we have minor ABCD here. XOP was also in this area. That was also major FIB support. That was our predefined level where we have intention to take in the long position. But due to the strong data on Friday, market has dropped significantly below it. So we have actually acceleration through the XOP. And in normal condition, when you see such as acceleration right to the OP, you usually sit on the hands and see what will happen. Because when the market hits the OP and this collapse, it means that it could go lower. The XOP of this action stands, as you can see, below the previous lows. And it means that the butterfly could be erased. So if market will drop below these lows, no butterfly will be on the daily chart. Hence, we need to take a look at the alternative scenarios that we could get. And one of them stands on the 4-hour time frame chart. This is Gartner's triple to buy. If market will drop below these lows, it will not totally erase the possible bullish reversal. Different pattern, just different pattern could be formed. And this pattern is this, as you can see, Gartner's triple to buy. So the D point stands approximately 1379. And take a look on the hourly chart, XOP also stands 1379. Watching for XOP of this ABCD pattern is possible, and actually it also could be the triple to buy. It also could be the pattern. But in the current circumstance, I think that's almost impossible. Drop directly to the 1346 by the two reasons. First of all, take a look. This is significantly below daily result. And second, on the way down, market has to break through the first level, confluence on the daily, and so on, because it stands below this confluence. In the current circumstances, it's really not possible, I suppose. So, what the conclusion we could make? So, if you already have the long position, as I do, and initially we should place stop below these lows because this is an validation point of the butterfly. I would suggest that we could move stop slightly below the 1379, maybe around 1377, because if market will form this triple to buy and starts upward action, we still will be in the game. If you do not have any position, you have better situation because you could keep an eye on this price action. For example, if market here will form some bullish continuation pattern, it could be Gartner's triple to buy here, minor pattern or something that will show you that it intends to go higher, or you could keep an eye on around 1379. For example, if the butterfly here could be formed as well, market could complete XOP with this 127 or 1618 extension, hit the XOP, form the triple to buy and starts upward action. So you could take the long position. So your task is a bit simpler. But for those of you who already have the bullish position, I would suggest that it will be minor evil if we will move stops below the D point, trying to not lose the trade if market will form the triple to buy instead of the butterfly. But still, I suppose that the butterfly is still possible because this was just reaction on the strong data. Market was thin due to the Independence Day holiday, and then the starting of the next week could be different. So just let's see what will happen. But in general, the strategy stands the same. Tactically, whatever pattern will be formed here, it will be butterfly or triple two. We still suggest the reaching of the 1450 area within the 2 weeks before the end of the July. And maybe as a result of the Fed statement, if we will be correct and indeed the Fed will take more hawkish position in the Fed on the rate, that could trigger the major retracement on the gold market that we're waiting for. So that's our medium-term view on the gold market.